Cheers, LWT. Start the little stream.
Cheers.
Fucking, let's go. So, this is the webinar, free webinar for how to identify your opponent in a trade. So what does it mean to identify opponents? You're basically putting yourself in other traders' shoes. You're trying to think what they will do at like certain price levels and like what their trade plan is. So you're thinking what their mindset would be like. So you're looking at the risk areas, the price targets, and what their emotions will be like at those areas. Like if it's at their risk, are they actually going to cut it, or are they going to get nervous? And then think of the patterns that happen throughout the day, like especially on an intraday chart, like chess. Like some patterns in intraday lead to other patterns, but those were kind of planned moves. Like the first pattern was planned to set up the second pattern. So you got to kind of think of it like chess. Like there's people that are playing these charts that are not just thinking about the first move; they're thinking about 3 moves ahead. So you got to kind of think like them. So some key points to observe when like identifying opponents. The first is volume, because you want to know like how many traders are thinking the same. So at this point in the chart, there's a lot of volume, and it's in a very small like area of the chart. So there's a lot of traders that are right in this area. So you're trying to use that volume to figure out how many people are doing the same thing or in the same area. And then the second is you're looking for sets of traders that are thinking the same way but at different price levels. So when you see price moves that are caused by momentum, if you identify these groups of traders, it helps to find potential momentum. So when you're looking at this chart and you see these patterns, you should be thinking shorts are in here risking because the wall of sellers. So you got to think shorts are probably getting in here, risking this break right here. And then there's also going to be longs that are looking to buy this break right here and then risking the support level. So you got to be thinking what they're thinking. And then into this perk, you got to be thinking, all right, this is longs either chasing or this is an entry for short sellers in on this pop. And you got to be thinking, if these short sellers are getting in at this level, what is their fucking plan? Like, what are they doing getting in at this level? Because if I didn't have these lines here, it seemed kind of random. But they're most likely going to be risking this like 188 level up here. This should say 1.8, not 1.3. But they're going to be most likely risking this 1.8 level up here, which is basically if it breaks that level, it's an automatic trigger for a long because they're fucked. So yeah, when you're looking for sets of traders, you're really looking for like here's one set of short sellers here, and there's another set of short sellers here. So you're looking for multiple sets that could start a momentum swing if a price target gets triggered. So then the third thing you're looking at is the emotion. So know that trends are what many traders and trading algos use, and you basically want to look at these intraday trend breaks as like triggers. So if a trend is broken against a trader's bias, it can cause the traders to become emotional, which can lead to like really strong momentum because they're not going to want to believe that the trend is really broken, even though it clearly has. They're just not going to want it. So now that we're looking at this, like what could we do? Like with all this information, what can we look for a swing in momentum, and what areas do we know should be our risk, considering other traders' risks that are in this trade? And then we want to make a plan for a long or a short. Can we make a plan for a long or a short? And we can. In this situation, I would be more looking for a long, since there's 2 sets of short sellers in this particular move that went on volume. So yeah, like you're taking information about what traders are really in the trade, and then you're using that to make a trade plan off of their trade plan. So you're trading against them, like intentionally. So this is what happened in this situation. This is the trend line that I drew earlier, and it doesn't have to go like this. Is kind of lucky that it went this big, but like this is literally just this is the plan setup. Like if it sets up this way, there's multiple sets of traders that are stuck, and when that level gets broken, then they're completely fucked. Like that's what sets the wave of momentum the other way. So yeah, if you took the trigger off the trend break, you could have gotten there, or you could have taken the trigger over the 188 break right here. Either one would have worked. But it's just one example of when you read the chart of motions correctly, it can lead to big moves if you stick to your risk and not just get out into profit. So with that in mind, like I'm thinking about like what traders are doing at certain levels. You just go over some charts and kind of, I guess, do some hindsight and kind of see why these price moves really happened the way they did. So when you're looking at this big grind up and then it gets really overextended, there's clearly going to be a lot of chasers in here, a lot of short sellers getting in because now it's getting ridiculous. Went from 6 to 9 in like a day and a half after this big run from 3s to the 6s. So this is like the blow off top. So this is where a lot of chasers and a lot of big holding shorts that know what the fuck they're doing are chilling. So when it has this bounce like this, all these people are still good and all the bag holders are still bad. So they're going to be selling into this like crazy, causing this like erratic price move. And then of course on the second bounce, there's also going to be the longs chasing it. So there's more chasers up here, which is adding to this huge panic on the second hand. And then you got this support that gets formed right here. So you got longs in here that you have to think of them as big because they're the ones that are really causing the support to really happen. So there's big longs or big covers coming in right on this support level. So when you're looking at like CVSI, like long term, you can think of it both ways because you can take what these traders are thinking and you need to make a short plan or a long plan out of it. And basically, like you got you got a lot of support down here with this double bottom, and then you got some shorts that are in here, and then shorts that are in here that are stuck. And they could be long term, they might be already out, but you don't know. There's probably still some in here. And now you got this push, so this is going to cause chasers to come in looking for the breakout right here. So you got longs up here that are trapped, and shorts that are in here. So they're looking at like these wicks probably, I'm guessing, as resistance levels. And I'm guessing that if there was sideways volume on this chart, there'd be a big like volume candle right here that's rejecting it with all these wicks. So looking at this chart, you got to kind of like pace it out. It's like chess, but like it's almost like if you covered like I'd say this portion of the screen, you got to just think about like the chess game before everything unfolds, like what the chessboard looks like before it unfolds. And then a move happens, and a move happens, and a move happens. And now this is the next setup in the game. And you just got to be thinking where it's likely to go. Right now, this was yesterday. CVSI is like right around here, I believe. Let's see. Yeah, I believe it's around like 5.2 right now. So that's showing that this higher low is being respected. Shorts are getting scared, but there could also be shorts up here that are going to be looking to risk these highs on the CVSI. All right, I'm done talking about fucking CVSI. But yeah, you just got to be looking at these price moves as not just moves, but you have to be thinking about who's playing them and like why it's really happening. Like what, like it's all hindsight now, but like when you look at it in hindsight, and then like say NBET for example, yesterday when I was making that trade plan, you just kind of got to be like looking for it real time, and then when something like that sets up, you're good to go. Sorry, I didn't mean to click through that. But yeah, if it, like looking over this breakout level, this could do two things. This breakout can hold, and shorts are scared from down here, and there's enough shorts that are trapped here to cause the breakout. Or two, there's going to be big short sellers looking to use this breakout as like a long trap. So they're going to be looking for this breakout. They're going to shoot it up probably like 6.5 or 7. They would use it as a trap, getting all the chasers in, making everyone think it's going back up to the 9s or something. And they would short it down like instantly, and then probably that day or the next day it would go back below the short level. If shorts are really aggressive and they're looking to, if a short is really trying to trap longs, that's the kind of move that would happen. So you just got to think about like what could happen in the future with moves. Here's an example on here. So this is a chart I'm looking to take a swing on after this long price move to the downside back into support. And basically, again, what's the first thing I'm looking at is this huge fucking volume, dead bottom. So like that's clearly like an indication that there's a lot of shorts, a lot of longs right here. And like with that much volume, they're big, like they're huge. So this is like an exact trend reversal that you can see right here. And here this day actually ended up closing closer to like the highs. So it ended up holding this higher low. So you just gotta be looking at charts like this. Like there's no crazy volume like this where there's 4 stacked or 5 stacked candles right next to each other, and it still happens to be at the bottom. So you gotta be thinking about that, as there's traders that are long with big fucking size that are up money, and they've got a dead bottom. So you just gotta be thinking about like what the traders and how many there are based off the volume in their certain situations, and that's a good situation for them. So then you should be thinking to go long as well, to catch the reversal. There's another example of a chart yesterday on NLST. Sorry, I gotta take a break real quick. I'm talking a little bit, I gotta take a drink. So looking at this pattern here, it kind of looks like a bunch of fucking choppiness nonsense, but it can kind of get broken down pretty easily. So you got this kind of wave motion in the pre-market, and that this kind of like this, whenever I see these curves like this, it makes me feel like there's people that are like slowly sizing in like cent by cent, or like in this case it would be like quarter cent by quarter cent they're sizing in. So it's getting like heavier and heavier and heavier as it gets to the top and then curls. That's what I'm imagining. They're just adding, getting heavier and heavier as it's going up, looking for that price move to change. So I'm like looking at this, so it looks like there's a lot of short sellers right in here, especially if this like wicks that look like people are attacking it. It looks like short sellers in right here, thinking this move's bullshit. And then right here, this little breakdown, that's the long washout. Longs are now out from there, and they're all right here. And then shorts are getting in here chasing weakness. And then when this reclaims, basically all these longs are now up money, all these shorts are now down money. And then it comes up to these shorts. So it goes right up to these shorts resistance level, or to their entry level. And they're probably, if I had the pre-market, they're probably risking like a cent or two higher, like 5% or something like that. So you gotta be looking at this, and there's another group of short sellers that are now getting in. Well, same curve, same arc of like, when I see that, I just think of shorts adding and sizing in heavier and heavier the higher it gets whenever I see this kind of arc motion on the chart. So there's shorts here. So like clearly this break is going to be very powerful, and it led to like a 10% or 12-13% move as soon as it broke. But this higher low here really gives you a nice indication, because you're looking at this. It came right down on that support. This is a great dip buy, because it came right down onto support where all the longs are now here and all the shorts are here trapped. So this is clearly going to be a support zone, and it drove it up right away. Like there could have, like I guess if shorts are more confident, this could have turned into a downside move if they were risking this high right here, and if there was enough of them blocking it right here to risk this high, but there just wasn't. So then looking on this huge consolidation move here, it kind of like dip buys are good, probably like from like here to here in this area. That would be like my consideration of like, yeah, that was a good dip buy because it could still run. But like once it starts getting like here, I don't know, and then when it gets here, I don't know, here, I don't know, like. And then eventually it starts cracking because it's just been too long. So yeah, I'll be looking for more of a break over like the 4/8s, because that's again where a lot of shorts and where a lot of longs are entering right here, especially if this really high volume right here. So shorts and longs are mostly like in this area. So if it breaks that area, it's going to start going. And then I'll skip all this because this is just consolidation, kind of just choppiness, higher lows, lower highs. So this right here, this is a pattern that like I've half tracked. I've not really full on tracked to know the percentage, but I've been watching it a lot, martini style, and know exactly what it is in my head. But when I fuck yeah, funny. so when this shit breaks like this, you're basically getting a washout because all the longs are freaking the fuck out. They're all getting the hell out, and it's attracting short sellers. So they're seeing this breakdown motion and they're just thinking it's over, game over. Like, but it's not. Like, it's not over. It's got to at least go red on the day. So this looks fucking awful. But if there's someone that's looking to go long down here, they're not like really necessarily just looking at this part of the chart. They're looking at this part of the chart right here. They're looking at these guys right here. They're looking at these longs and then this group of shorts that are all fucked still. So they're seeing this as a great dip buy, and it also has this higher low to go off of as well. So there's longs here as well. So like they're getting, a lot of traders are getting sucked into this piece of the chart right here. But really, you still got to watch the whole thing because there's these longs and shorts that are trapped, and then these longs and shorts that are trapped. So it can still cause an upward move. And this one actually went up to like 55 or something like that in after hours. But mostly probably because of this move. If it went straight up, it could have just faked out and then trapped longs and then went down and grinded down. But the fact that it trapped shorts and then held support, it trapped them and then kept running. And then, yeah, that leads to a better move eventually. All right, so this is NBEV again. Used this example earlier. But looking at the daily chart, this fucking thing is shit. This is the worst looking chart that you can get at this point right here. This looks like awful. But from a contrarian mindset, or if you're looking at it to fuck over people, this is the best chart ever. Because this is like the biggest, any short's gonna fucking want this thing. Like, it looks god fucking awful. So like, it looks real bad. I can't put any more in that. Like, it just looks like shit. So when you have something that looks like this, it can really attract more shorts in, which can cause a bigger move as long as it holds like support. So it's, you know, like on here, if this is the area of support, if it dropped down to here, no longs would fucking touch this thing and try to squeeze shorts. But since it's holding kind of bullishly, like half bullishly on the day, like it can still cause them to have this huge momentum move because it already did it once. So it can do it again. So yeah, looking at this, this is what, oh man, I was supposed to explain something totally different. It's okay. But looking at pre-market, of why this was such a good short in pre-market based off of this really crappy chart here. Yeah, it looks crappy for the morning, but yeah, in the afternoon it set it up to be a really great squeeze play. But in the morning, it provided for like a really good chart to catch a short because we even had a trader in the room said this looks kind of bullish off of this bounce because I'm assuming they're looking at this downtrend break thinking, all right, it broke downtrend, there's no downtrend on it. But the thing is, it had all of this consolidation with all this volume, like that's a decent amount of volume. And so there's just longs and shorts in this area right here. And since the stock daily chart is so bullish, shorts are going to be able to calm and they'll be able to be sticking to the risks and they won't panic out because they just see this daily chart and it looks fucking awful. So when it has this bounce here and it gives another short entry and it has this curve, same fucking bounce curve where it just looks like it's getting heavier and heavier the higher it goes. So then it gets slammed. Like, that's just how it happened because the daily chart was so shit and it set up so perfectly to trap longs up in this area and then give shorts a really nice fucking entry and then another re-entry for shorts, another long trap. If longs are buying this downtrend break, they're getting trapped into it right away because these shorts are going to be risking that pre-market high. So that's what set up to this huge downside move in the morning. And then, yeah, so if you guys have any tickers today that you'd want me to be like, I don't know, like, because it won't be a hindsight at this point. I could literally just look at what happened today and then kind of show, like, what levels are really key to break later in the day and what would most likely happen. So if any of you guys want to, like, call some tickers out.
VKTX. You're welcome.
Alright, fuck. I didn't really think this through.
Clearly.
clearly, because I have to exit the PowerPoint to do this real quick. Look at fucking end of. I didn't even see that dip happen. Good thing I wasn't looking.
I think we need to make a swear jar for you, Jack.
Was I cursing on?
Just your mum wouldn't be very proud. Let's put it that way. I mean,
right, well,
not saying she is anyway, but
I fucked up.
Never change, buddy.
KTX, alright. So these gap up plays, I never fucking like these ones, especially the ones that go huge like this, because this gap is huge. Like it could go, like theoretically, it can go back down here. No matter how good the news is, if longs get trapped in something like this and they're all chasing the news and they all get in near the highs, support is right here, so they gotta fucking understand that. Like they could just keep you dip buying, and shorts are gonna be taking this back down to this level. So for dip buy, like up here or in the 17s or anywhere in this area is still like a no-go for me, because it's too high of gap, and I've seen this too many times. But looking at the chart, it's just, this is longs trapped and shorts loving their life. Like that's all I see. So like this initial gap right here, you're giving a nice, I guess this was a decent dip by entry if you're going to go long. So there's going to be longs right here, and then longs especially right here on this higher low, looking for a move to the upside. And then you're going to get shorts in at this level, risking pre-market highs, because I guess, how high is that? 28 to, damn, so that'd be a fucking massive risk. But there's people that are selling into this. I guess it could be this level right here, 26.7, 26.8, barely broke over at 26.7. Yeah, so I'm guessing it's like that 26.7 level that they're looking for resistance towards the lower part of this wick. So you got to be thinking shorts are in right here, there's longs trapped up here, and then since this is a long downtrending chart with a bunch of fucking people in it now, it's not looking good. Like there's longs trapped here, there's massive volume at the open, so like the most volumes up here, like, and you can see it indicated on these purple bars. There's a lot of fucking volume up here. This is crazy, because this breakout right here was clean as hell. So you're gonna have a bunch of longs chasing that breakout, and then you're gonna have the shorts that are getting in up here, risking these pre-market highs, or maybe even 25 for a whole number wall. And yeah, so then there's this breakdown here, so you're gonna be getting more longs panicking out right here, and then you're gonna be getting dip buyers here, I guess, too. We're looking at that initial base in the morning, and it's looking like shit. It looks so bad. Like every long's underwater with massive volume, and every short is also underwater. But being because I know this has a really good catalyst, so you got like NBEP wasn't a catalyst play, which makes it really good for technicals, because like I've noticed that like when shit doesn't have a news, it technically like runs off of the chart pattern a lot more than something with news. Like a news can give a lot more fake outs and fake downs, since like they're trying to like free people out of their positions just so the other people, so they can get a better entry. So on this, like it could start grinding back up, because then if it gets enough volume under it, so if it breaks probably this 20, because this is probably the level right here where the most shorts got in, I'd say. At least like right here, they broke below a day, and then they're getting in right near below a day, like right after it sort of reclaimed the open. They're going to be getting in right here, and I'm guessing they're going to be risking this really high volume level right here of resistance. So shorts in here, and that would probably be the only long trigger I would see by looking at this, is you're going to be looking for these shorts to get fucked over, because you're going to have these shorts right here, and then you have these shorts at the low of day getting squeezed. So you got right there 2 sets of shorts getting squeezed, and that's what you're looking for. You're looking for multiple sets. But all day it's been a short, so they've been looking for multiple sets of longs to get screwed. So you're looking at this initial dip buyer right here, higher low longs, then you're getting the longs right here buying the break. So when they slam this thing back down, they're catching the breakout buyers and they're catching the dip buyers at the same time. So that they're basically getting their short entries, which is better, and then taking those two sets of longs and then fucking them over, and then they're getting the profit from the longs. All right, let's do another ticker. If you guys want.
NBEV. Been crazy.
Skitty kit pat pat.
Fuck yeah, that's pretty loopy.
It's a roller coaster.
I'm actually long from this break right here at 242 in NBEV, and let's see, Jacob's long. I think he got in right here, and he got in at
238 is the average right now.
exit session. What the fuck is this? All right, so looking at NBEV, that you gotta really look at it like this, because this is the whole move here. So first day, shorts, tons of shorts are trapped right now. Like this double top was a clear indication for shorts to get their entry. This bounce short, which was the risk I was indicating at. Stop doing that. Which is the risk I was indicating at. Really, like once that risk level broke, that's when it started really getting heated. So you got all these shorts and you got longs buying the base right here. So longs are really looking good, and then I didn't even look at the daily chart in BKTX. Sorry about that. But on NBEV, I could really give some good comments on the daily chart. Actually, no, I did. I did talk about how the gap up looks pretty shit. But looking at this chart here, there's a 17 million volume day and another 17 million volume day, and now today's hitting 22. So the charts, like, what is it? I mean, the float's like 15 million or 10 million or something like that. Like even if it was 30 million, say the whole float basically is up money. Long term, the whole float is up money. So looking at this, like, which direction is it going to go? You're looking at, this is really fucking annoying. Yeah, okay, there you go. So looking at this, you got those first day shorts on NBEV that are all trapped, and then you're looking at the daily chart, and you see that long term, the majority, if not like the whole fucking float long term, is in an uptrend because it's above all this volume now. And if I take this chart out even longer, it's got even more breaks. And then this break was at 258. Is that what this top was over here? It was 2.6. All right. It would be cool if it would hit 2.58 first. But this break is probably be the really key one that starts the crazy volatile move to the upside, because then now there's not really any risks in sight for shorts to take on. Like, what are they gonna be risking? Like 3.4 or something, or like 3.3, like into this resistance. That's all I see. But I guess going into the close, a lot of shorts are getting squeezed out, and then inevitably there's shorts getting into this push because they're looking at it saying this stock's a piece of shit. It can't go any higher. There's no fucking way, and they get squeezed as well. So there's gonna be shorts right in this level, and longs in this level, and then shorts in this level and longs in this level, and it's in that level right now. So basically, if it breaks below, I'd say the obvious thing to say would be like, yeah, if it breaks 235, it's not bullish anymore. But if you're looking at it for a squeeze, I don't know, you could say that that's a trend. I deleted the other one for some fucking reason. That's weird. So like, this is a pretty nice trend to have, to be honest, for a downside. It's got a pump here. Like, I've seen it where these charts even come up and push, and they'll tap it, and it's like they fucking had the same line, and it's kind of crazy sometimes, but it's just like they come up, tap it, and bring it back down. Like, they just give it the tap just to let everybody know that's downtrend. And it's kind of crazy sometimes. But looking at it to identify people again, you're going to have dip buyers and you're going to have shorts from yesterday that are all fucking screwed. They're all going to be looking at these huge, like, momentum swings to the downside as for longs entries and for shorts exits. They're going to be looking to get out. and then you're gonna have this multi-bottom with higher lows signals that. So again, you have these arc motions in between the higher lows. So you're gonna have shorts piling in on this area, piling on this area, because it's just getting heavier and heavier as it goes up. And you're gonna have longs here, and then eventually these shorts get squeezed the fuck out. You just I'm talking a lot. But this is just how you have to think about, like, when you see these price moves, you gotta be thinking about, like, how these fucking people, like, they potentially could be still in it, but they're causing this huge price move to the upside, giving more shorts entries. These shorts could even be risking high day at this point if they want to risk 10%, because the risk reward's there to risk 10% and potentially make like 30%. So the risk reward's there to take that kind of risk. So then you got shorts that are in there. You're gonna have longs that could potentially be buying this break right here, risking this level. Which honestly, the way that this broke down, it looked like somebody was setting this up. Longs get stuck here, but then they panic the longs so that they all sell down here closer to the risk when they're really fucking scared. And then the long, like a big long, whoever the fuck wanted to screw these people, really controlled it. And because they know that support here is right here with all these short sellers that are still trapped. So they're able to bring it down, get all these people to sell to them, and then bring it right back the fuck up. As of that move right there. But now what it's doing right here with this triple top movement that's doing, it's dropping longs and shorts, and then again you're looking at this really high volume. So majority is this is where the big volume is. Like in these three big candles is like right here. That's where the majority of shorts and longs are. So looking at this clear long indication over the highs, and then again, what I said before, clear short indication on the lows, because you're going to have these where everyone is, so a break to either side is going to cause a momentum shift. Jesus Christ. Alright, you want to do another, or we good on another live example?
I want one more, mate, on
Alright, let me take a piss real quick. Can I take a piss real quick?
As long as you take the camera with you.
Alright, yeah, I'll bring it. 1 second, Maddie.
So how's your day?
I'm red, mate.
Me too. Pissed at NBev. Over it.
How much you down, Jordan?
What?
Super whippy.
How much you down?
Oh, not much. $50 or less.
Skitty kip pat pat. How did that happen? BKTX just broke 19. Jesus. Skitty kip pat pat.
Damn. I was gonna make a drinking game for this, but I forgot. It was gonna be like every time I say you gotta take a sip.
Wait, you could have changed it for a swear word. We'd be fucking hammered. And 3.
Well, you said make it entertaining, and I'm getting easy right now, so I'm making it entertaining.
Alright, Eminem. Anyway, 3, 2, 1, go.
Sounds good.
NIO.
NIO, you fucker. Alright. But
I've got a list of 5.
accidentally clicked the other screen share. Alright. NIO. So, do you want me to just explain the last 3 days or whatever? Because I guess, I'll focus less on the minor moves right now, and I'll just focus on these bigger moves that are happening.
As you wish, buddy.
So this move's massive squeeze to the upside. Shorts are literally getting in right here. They're thinking they have a fallen entry. They're just like, there's a parabolic things at IPO. I don't know who the fuck would be trading this, but some short is literally thinking they're making a great trade here, getting in. They might be taking pieces off, but there's gonna be shorts trapped down here, which inevitably holds it up. because they're thinking it's still coming down, and these people up here think they have a sweet ass entry, and they think it's coming down no matter what because it's losing its whole spike. But when it holds, it's basically building in more shorts. So these shorts can be risking high a day, 10% to potentially make more than 10% or 20. Like even if they make 20% and they're only risking 10%, that's still a decent risk reward. It's not amazing, but it's still like worth a trade. I feel like. So you're gonna have shorts that are getting in here, longs are getting in here, a whole way up. So they're getting real trapped, which led to this huge gap up move that usually is like the end when it blows its load, gaps up way too much. Then shorts get a really good entry, longs get a really fucked up entry. Then they start panicking out. Longs just keep adding to their position because it's not really that it's not warranted this kind of move. It was just kind of a chart breakout, and people got squeezed. So then looking at this could have went really bad. This looks like a huge short trap to me. Like right here, this just looks like all the longs are getting washed out. So like the longs are now going to be like right here, and then shorts are also going to be right here. So this could have easily went bad if the float was maybe like a tenth the size. So I'm pretty sure this thing has a huge float. But if the float was like a tenth the size, this thing could have easily ramped back up with this kind of movement after a day like this. So then looking at this, shorts have a ballin' bounce short entry. Longs are now trapped there because they're looking for this continuation move now because it looks kind of convincing up here when it's flagging, putting in some dip support candles after this huge volume squeeze day. So they're up here thinking shorts still going to be scared, looking for that move. It's definitely a trade that's worth taking. I feel like if in the moment, now we can see it wasn't, but right here they're looking basically that all these shorts are still fucking scared and they're still trapped, but they weren't because the real shorts are actually up here now with all the volume, and now there's all these bag holders that are gonna be scared as well. So it was a good idea. It's just this kind of fucked it up right here. So the end of that day, this is all shorts basically, like, and longs saying, "Nah, I'm done with this thing." That's basically what that says to me. Looking at this move right here, though, actually, especially yesterday, I was kind of looking at it as maybe like this gap down might be inviting shorts to get in real low, and then potentially can go for a red-green move. Didn't happen though. Again, it just looks like longs are fucking like it's just another play like VKTX where longs are just. It's not looking good at all. There's so many sets of longs that are now underwater. So like the momentum, the downside's gonna keep going until massive volume comes in where longs are in a good position and shorts are not in a good position. That's what it's gonna take. So yeah, looking at yesterday, specifically the gap down, this invites a lot of shorts because this is basically like a washout long. All the longs that are de-risking levels that are close to here are going to be getting out, and longs are going to be getting in that are now going to be risking new levels that are even lower, and this basically is getting in shorts. So the fact that it grinded up in the morning could kind of see that because it's getting all the shorts in and then getting new longs in. They're going to be risking new lows, so they're not going to be scared out by any kind of price movement that's minor. So yeah, this nice like squeeze that's most likely squeezing out all the shorts from here. And then let's see, it went from 8 to 9. So here's where you look at here's an example. I didn't really do a lot of these, but here's an example of where you gotta be looking at price targets for traders. So like these longs right here that are buying near 8, even like 8.20, right around this 9 area, that's their like where it rejected really hard, where there was really hard selling pressure. This is right around what's the low? 8.9 about to 9.1. So this is basically their 10% level from 8. That's pretty much where a lot of these longs from the pre-market or the aftermarket from yesterday are gonna be taking their gains. Same thing with these guys down here. Like that's like 5% ish, right around the major tops where there's like five of them. That's right where like the original longs that are getting in over this reject, I'm guessing, they're going to be selling into that, taking their gains. So it's 5-10% on something that looks like that. So they're gonna take their 5-10% that they made in like a couple hours off of something that looks really bad like this. Again, this multi-top really provides a really good entry for shorts. So now shorts are in here, long, and whenever shorts are in here, longs are in here. So shorts are feeling good, longs are fucking screwed. And another thing about this kind of pattern right here is when you see these top here, top here, top here, top here, top here, top here, top here. This is what fucking happens. This is why all these downtrend breaks, because I guarantee that's what they all are. I guarantee, like, let's see. I guarantee all these can be attributed to some kind of downtrend break that caused these moves. But the reason that they're not causing actual swings is because there's another one right here, and then there's going to be another one right here, and then there's going to be another one. Like, so when it comes up, this perk's going to have all these different tops that are going to make all different downtrends, which eventually makes it not to work. So then when it makes its own multi-top, just look at how many downtrends I'm able to draw now. It's not even remotely close to being like capable. Like, look at that. Like, and the reason I draw so many is I'm looking for all the trends that all other traders are looking at, or algos could potentially be looking at. So all these tops do not say good signs for this. These aren't in play anymore. These are kind of gone because they're already broken. But these are ones that I'd say are more the main ones. Like, once you see this kind of these kind of downtrends, it's not a good sign. There's too many. Once one gets broken, this is where it could be like chess again. Once one trend could be broken, yeah, that trend's broken. But then all it takes is another trader to think, all right, I'm waiting for this trend to be broken, get all the longs to buy that trend break, get all those shorts to squeeze out on that trend break, and they're going to be getting in at the next trend, and they're going to be risking the trend, the second trend. That's all it takes. And then if there's another one after that, there's another trader that's looking at it too. That's all it takes. Yeah. So any others or not? Think we good on this one?
That's me on that one.
Alright, word. Anybody else want one?
Anyone got any questions?
And Jordan?
No, all good.
No questions.
Word. Alright, I got a little bit more. The live trading wasn't or the live examples wasn't bad.
You should check out your MBEV right now.
I saw it on the whatever. It was looking pretty nice. Yeah, so, yeah, giving a pretty good long entry here. Kind of like it. Is that horizontal chart? I'm going to be going over this pattern pretty soon, but these always skeeve me out a little bit because the real support is actually like right here and like right here. That's where the real support is. So if this doesn't continue on and it fades back through these highs back to the real support, then there's 1 level, 2 level, and then three levels or sets of shorts that are now up money and sets of longs that are now down money. So we just gotta be careful for this level on NBEV. But yeah, it's looking pretty good. Yeah, this level of shorts are stuck, these shorts are stuck, these shorts are stuck, and yet again all these longs, especially this big volume right here of longs and shorts. It's now to the upside. The momentum's clearly pointing upwards. But when it's getting down on this level now, so this is why it skews me out, because yeah, it looks great. It's a breakout. That's attracting all this volume that's coming in. That's all the longs. But here's the thing too. This is where it gets like chess. This is just one move in the chess play. Earlier in the chess game, if we want to keep it like chess, the chess player already set up like a good defense for when this move happens. So like now there's this level they could risk off of this 270 level. If this 268 doesn't break, there's definitely 100% like a fuckload of shorts that we're getting in at 268, risking high day. Even though it looks fucking balling right here, this could just be a long trap and a short great entry. And that's all it takes. It just takes that, and then yeah. But I'll go back to the PowerPoint now. But yeah, that's basically what I would see now on NBEV. It's just, yeah, it looks great here, but the other move, and you gotta watch out for, is right here, and that could easily blind. It's literally like chess. Like when you're playing chess against someone, and they pull a move where it's just like, I didn't even see that coming. This is the same fucking thing, where it's like you're moving, attacking, you're buying, thinking that. So you're moving your piece on the chessboard, thinking that you're making the right play, thinking you're being aggressive, and it's a really good play. And all of a sudden they pull their move out, and it basically like sweeps the carpet, and it's just like you didn't even see that coming, and it's a great play. And it looks like that's kind of what's happening now, but it's not looking that bad though, because it does have a lot of levels of short sellers in here from today, and then you had yesterday's trapped as well. So it could still break, but that could happen. This could be where short sellers are risking high day, and this is where it tops out. All right.
So it's just a matter of volume at that point then. Who gets in on which side? Because it does look like an ascending triangle throughout the whole intraday so far.
Yeah, it's like it really just depends if like traders see it that way, and if there's enough volume thinking it that way, then it's gonna happen that way. Yeah, if that 268 doesn't break soon, it's not looking that great. All right, so after that, we got a quote from Larry Williams. The best patterns I have found have a common element tying them together. Patterns that represent extreme market emotions reliably set up trades for price swings in the opposite direction. So that's literally what you're doing. You're looking for like price movement to the upside or downside, and you're looking for traders to get stuck because they're getting emotional, so they're making emotional decisions, which causes them to be able to get stuck. And then you're looking for a price move in the opposite direction that basically fucks those people over because they're being emotional and stupid. So yeah, that's a pretty good quote. What does it mean to like think like you're contrarian? And the easiest way I put it was doing the opposite purposefully. You're like purposely trying to think to do the opposite of other people to like get a better outcome. If you want to add that, you're basically just you're looking, since 90% of traders lose or 95% of traders lose in the long run. You're looking to do the opposite of them. So you're looking for plans that really counter strategy, because in trading it's counter strategy. So you're looking for plans that counter strategy their plans. I also have a couple counter strategy or contrarian patterns that I've noticed while trading, and some that I've like came up with and have seen since I've made them. But for when I use the contrarian mindset, though, I'm waiting for certain patterns to arise that confidently tell me what kind of traders are getting into this pattern, like. And then when it sets up how I'll go against those traders that are going to spark, like they are going to start their momentum. So I'm just looking for those group of traders that are making the wrong decision, and then confirming it by volume about how many of them there really are and how many sets there are. And I'm just going to go against them because they're setting up for failure. It's like being able to see the next chess move. Like you're the chess player that's really above the other players, and you're able to make a strategy that's going to trap them into making them think they're making a great decision, and you're just going to completely eliminate them, and it's exactly what you wanted them to do. It's kind of like it's how I think of it, and that's like kind of just how it is. Like traders set up patterns to get other traders stuck, and then they use that pattern to cause a price move. So yeah, here's another quote from Larry Williams. I'm looking for some visual pattern that emotionally sucks the public into buying or selling at just the wrong time for them and the right time for me. So with that in mind, all the next patterns that I'm going to show you, they're more so really tight intraday patterns that happen between like a half hour, like 20 minutes. When I see these patterns happen, this is what I think, and this is like what I thought when I found a lot of the patterns, or when I've found out the psychology behind a lot of these patterns. So the first one we have, this is a very obvious pattern. I think everyone knows it. It's a descending triangle. It's not generally. It's just it's a bearish pattern. That's what it is. Like when you see this, it's a bearish pattern. So what am I looking at this? So supports here. Longs can be looking at this as their risk level. So if longs are getting a little above there, this little bottom, they're risking that. And then if they're getting in here, they're going to be getting in either at the bottom or they're going to be getting in a little above it. Same thing here. They can be getting up here at this point, or they can be even getting in like anywhere on here, risking the bottom. But then you have the short sellers as well. So you have these short sellers here, and then you're getting the short sellers in the bounce, short sellers in the bounce. So when this support breaks, shorts think it's a good thing. Longs think it's a bad thing. So you got them both thinking the same exact way at the same time. So this is what happens. It breaks down, support breaks. But what this really does, and I even included this here to really demonstrate how bearish it is. This is for, say, the higher low before this. So it's now breaking a lower low on the chart. So this is bearish of the bearish of the bearish. You got longs that are now cutting their losses from here. You got shorts that are now thinking, oh, I'm good. They could even be adding or entering, or shorts can even be entering their position on this little descending triangle break. So you got a bunch of bearish momentum. So going back to what I was saying before, being a contrarian, you're thinking the opposite of all of them. You should be thinking what's bullish about this and what's predictable about this. So when you saw the initial pattern, you said to yourself, this pattern's shit. This is a bearish pattern. So why aren't you already thinking it's going to go down? So if you're already thinking it's going to go down, why aren't you thinking, if I know it's going to go down, why don't I buy it when it goes down? If I know it's going down, why don't I buy it when it goes down? And that's kind of what set me on it. So this is what you could look for, is a panic that's big enough that provides you with a good entry. And I've actually semi-tracked this for probably 3 months. I only saw it probably 12 times in the 3 months that I tracked it, which makes it a hard pattern to track, but it works. You're looking for this very bearish pattern, but you're actually going to be looking to dip buy the panic, because all these longs are panicking, getting out. All these shorts are adding to their position, and so there's a bunch of selling going on right here. So who's buying? The contrarians are buying. All the people that know that this is only say this is only a 10-minute period. There could be a whole daily pattern behind this that's completely bullish that says it's going up. So when you see this on a bullish chart, it's really not bearish. It can give you a really good indication that you can score a sick dip buy, because everyone's thinking it's bearish in this little pattern moment, but you can really get a good entry because you know if it breaks, it's going to panic. So typically when these things panic, they'll have a 2 to 4% panic, which gives you a 2 to 4% gain almost off the bat. Because I've noticed that they almost always will at least spike back to this level, or they'll spike back to this downtrend. But when they break, they usually go to break new highs. So that's just a great contrarian pattern that sets it's a bunch of bearish indicators, but it sets up for the best long ever, because they're all thinking bearish, but you're thinking bullish. And that's exactly what kind of contrarian pattern you'd want to look for. And this is what you'd want to do when you're thinking, to identify your traders. You want to be thinking what everyone's thinking, and this is what this pattern is. That's what this pattern is. It's you know what they're thinking. You know if everyone's thinking this is bearish. You know longs are thinking if this support breaks, it's over. It's never getting back up because all these longs are now good. Not the case. So it sets up a great dip buy. All right. Yeah. Next pattern. Let's see. Who was I telling this to yesterday? Miguel, I think I was telling this to yesterday. When I was telling him not so long. Holy shit. End of.
Yeah, that was me. AWMS.
Yeah. And it wound up doing exactly what I said. It wound up consolidating or going down and being a bearish pattern, but it had this nice spike, and I believe Miguel was buying it, or I'm pretty sure you're buying it, right?
Yeah.
Yeah. So you're going long on these dips, and it was sort of a pattern similar to this, but what this is high day break, and then you're getting these nice higher lows right here. This might actually not be the example. This is a different pattern, but we'll get to the other one. Sorry. This is actually a fake out pattern. So when you're seeing this, you're seeing shorts are getting in like a lot right here. So if there's volume, there'd be, for this pattern at least, there'd be heavy volume here, but like sort of like medium to light volume here. So you'd be looking at this higher low, higher low, higher low. So you're seeing ascending triangle. This pattern is actually the exact opposite of this pattern. So that's how I came up with this pattern, actually, is by flipping this one around. And you see this one all the time. It's when there's this higher low action, this ascending triangle. All the longs are thinking they're good. Shorts are thinking, all right, if it breaks this resistance level, I got to cover. So what happens? Breaks high day, shorts are covering, longs are adding to position. Broke high day, longs are adding even more. But then this happens. So now you got shorts right here, but now you got like shorts on a ton of volume right here. But now this volume is most likely going to be even bigger than this one right here. And then you're going to have a ton of longs and like longs that just bought and shorts that just covered right here, causing this massive parabolic squeeze. And basically that's going to lead to the best sell or the best short sell, because everyone's thinking bullish, which that's exactly what contrarian is. As soon as everyone's thinking it, that's when you should be the other way. So this could be a high day break here, and this does look bullish, but the real support, when you think about it, is right here, not right here. So when it breaks, it's going to come back to here. It can maybe bounce a little bit, and it can maybe even like do a double top. But like ultimately, once it breaks this and goes to this support instead, now there's two sets of short sellers that are now on the top of the money, and then two sets of longs that are now on top of the money as well. And then to add to that, another catalyst is this uptrend. And if it breaks that uptrend, now all the longs are going to be panicking out. And then these longs, and then this whole like chart becomes just a big bag of longs that are now stuck. If it breaks down, if it breaks down into the lows. Here we go. This is the pattern I was just mentioning to Miguel. This is the one that I was telling him to watch out for. When you see this huge parabolic move, and then there's a higher low, and then a lower high, higher low, higher high, higher low, higher high, higher low, lower lower high or double top, either one. Yes, this trend, this is what everybody's looking at. Even the shorts, they're thinking, oh man, this trend's strong. It's grinding up. It's going right back to high a day. This trend's going to hold. It's going to keep going. But then right here, this is where it really turns around, because this is eventually the higher high gives a nice enough entry where shorts can then risk high a day. And then once it gets the next higher low in and it can't break that, you got two sets of shorts and longs that are now really close to the high a day. So if this trend breaks, which is the strongest trend ever for some reason, all the longs think that when they see this, all of a sudden there's an uptrend forming, it's going to be breaking high a day. That's not true. It's like the more obvious that this uptrend is, like the more precisely that it lands on the line every time, the weaker it's going to be to me, like if it gets in this kind of situation. So when you're seeing this trend line, if it had like a bounce down here, came above, and then it had a bounce like right here, there was no defined trend line, but it was going up, yeah, that'd be good. But the fact that it's so defined, just like these ones, how the trend's so defined, it really leads traders into like they get confused themselves. They're not confused, they get tricked. They think it's because it's so clean, they think it's so perfect, but that's not the case. It's so clean and it's so perfect that the other direction is even better. When you look for that break, that other direction is even better. So yeah, this is exactly what happens. I'd say whenever I see this pattern, it always fucking happens. Like it's not even like it never fucking works. It always fucking happens. It's just kind of hard to like catch it because it's scary. It's a very scary short to be getting into something like this. But whenever it breaks this,
there's this huge panic breakdown because this uptrend was so obvious and so strong that all longs now are panicking the hell out. All the shorts are now adding their position because there's no uptrend anymore. Now it's pretty much like there's all these shorts up at this level and this short right here. So now there's so many sets of shorts and so many sets of longs that are now up at the top. It has enough downside to push it. So that's a really good, but there's more of a pattern, I guess, not to play, but more to watch out for if you're going long. If you're going long, just know that the more precise it hits a line like this, the more precise if it breaks, it's going to break hard as shit. It's going to just keep going the fuck down. Let's see about this one. All right. This is another pattern that I basically like have seen a lot, and it's a weird pattern, and not a lot of people, I guess, see it the way that I do, I guess. So there's like a multi-top high on the high a day. Comes back down, consolidates, makes like a triple bottom, double bottom, whatever it has to be. It doesn't have to be 3. So yeah, it comes back down, has this bottoming, but then has this huge parabolic move to the upside. So you're getting buyers and sellers here, and now they're all up money. The thing is, though, is when this breaks high a day, it's actually getting 2 sets of longs in the same candle. So when it breaks here, there's getting longs here, and then when it breaks here, you're getting longs here. So you're getting a super amount of bullish sentiment for the stock and bullish momentum. But the problem is that this kind of pattern, when it has these multi-tops like this, there's a bunch of shorts that are in here and a bunch of longs that are in here. But the problem is support is in here. Support's here. This was the push. Like this was the initial push into resistance. So yeah, this is going in resistance, and yeah, when resistance breaks, it's supposed to come support. But when this is where most of the buyers, like there's more buyers obviously getting in on this higher low than there are buyers up here. So when there's a lot of volume down here of buyers, this is where the real support is. So like it could really fall right back through this 3 sets of short sellers and come right back down to here. And when that happens, it basically becomes, you see it completely differently now. Like, yeah, this looks fucking great. It looks so bullish. Look at it now, and it's kind of just like not looking so hot anymore because you got these 3 sets or these multiple sets of short sellers in near at the highs. You got these longs that are down in here and shorts that are down in here. But then this ultimate push gives shorts a really good entry, gets longs really stuck, and they think it's great, but support's really down here. Like that's how it ends up is like this is where all the longs, majority of them get in. So like this is where the real support is. It's not on the high daybreak, it's down here because it happens so quick. Specifically in this pattern. So like say this pattern did this instead and it had this grind up, that's good. That's all right. But like if it has this huge move really quickly, breaks the high, that's a parabolic move. So like it can go parabolic straight back down. And that's what you typically can see on these patterns is, yeah, once support's down here, if it goes parabolic, it's going to go back down to support, which is here, and then ultimately leaves your 4 sets of short sellers that are now up money. And there you fucking go, guys. And there it is. Fuck this dude. I might as well.